the BOJ did exactly the right thing to start normalizing monetary policy. I've seen a lot of talking heads in recent days blaming the BOJ. I think that's complete nonsense. The normalization of Japanese monetary policy is long overdue. The longer they take to normalize, the bigger the carry trade and the bigger the disruption when they normalize. So this process should have started at least when Kuroda stepped down. He left the job to his successor, Mr. Ueda. And this whole correction in Japan is a giant technical, it's a technical issue, not a fundamental issue, because people are selling leveraged positions. But it's also exacerbated by the fact that the Japanese stock market does not have domestic institutional support. Japanese institutions have been underweight Japanese equities since the bubble. They've been reducing positions in Japanese equities since 1990 when the bubble burst. And so the Japanese market, it tends to be a playground of foreign investors, many of them leveraged, and there's a lack of domestic institutional support, which creates the kind of volatility you saw.
So you think Deputy Governor Uchida-san's comments this morning, which have calmed the market a bit, is a bit of a walk back because of pressure that could have been external, also coming in maybe from the U.S., given the way stocks fell there?
Yeah, completely reactive, as you say. Unfortunately for the BOJ, the long overdue effort to normalize Japanese monetary policy, unfortunately for them, then coincided with the first comprehensively weak employment report. Everybody's been expecting the U.S. labor market to weaken in recent months, myself included. It's been remarkably resilient, so it was bad luck for the BOJ that the U.S. labor market finally showed clear evidence of weakening just after they normalized rates. The other irony is that the BOJ was under growing political pressure from the Japanese government and the Ministry of Finance to normalize monetary policy, because this weak yen in Japan was becoming too much of a good thing. The weak yen is causing big increases in prices in Japan. Regular Japanese people are suffering declining real wages. The government's popularity has been declining sharply. So there was pressure on the Japanese central bank to raise rates, coming from the finance ministry and the government.
So what do you think happens here on, Chris? That's the key question. Do you think that the dust is settled on this uncertainty for now? How do you look at the rate differential story between the Fed, where the pressure is now calling for 50 basis points of rate cuts, versus the BOJ, where they're saying, okay, we're not going to move rates much higher from here, but the expectation is that they will be hawkish. Where does that rate differential lie?
No, well, the key issue right now is not Japan, it's the U.S. economy. So we've had this 1 week data point on the employment market, which has caused these monetary easing expectations to pick up dramatically, just like we had very aggressive monetary easing expectations at the start of this year. So the markets are assuming what I'm also assuming, that in a situation where the labor market really weakens in America, the Fed will prioritize employment over inflation. But obviously, that raises two issues. Will the labor market continue to weaken? That's my base case. But it also, next week, the inflation data next week has now become important precisely because the money markets are now discounting more aggressive easing. So if the inflation data goes the wrong way next week, that's going to be a negative for markets. But fundamentally, what matters now is the U.S. economy. For the BOJ, it doesn't come naturally for the BOJ to be raising rates when the Fed is cutting rates. So if the Fed easing expectations really pick up, then the market's going to assume that the BOJ is on hold at worst.
Okay, just before we go, 30 seconds, Chris, very quickly. Where do you think dollar yen would end the year in this whole unwinding, rewinding trade?
No, I don't want to. My advice is not to speculate on dollar yen. I can give you a very good reason why yen can get to 100 and a very good reason why it can get to 250. Yeah. But as of now, if the BOJ's come under pressure from the U.S. not to raise rates anymore, then clearly the yen can weaken again. So you're absolutely right. The motivation of that deputy governor's speech today, I think, is very important, because a few months ago, the same deputy governor basically gave a speech declaring victory over deflation. So that would mean that he would support further normalization of monetary policy.